Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the euro currency. So I've already mentioned in our daily updates that actually 2 weeks ago we said about exceptional meaning and importance of the inflation for common sentiment on the market and for direction of the market, because it becomes really the cornerstone and a decisive driving factor for the markets across the board. And once we have said that, thinking that maybe Fed will get some time lag where they will able to feel comfortable for some time. Let's make this to sit on the hands and wait. Provides the time stretching that they would like to get to stabilize the employment, the economy development. Inflation is coming up really fast, and even on October numbers have crushed the markets across the board. So it means that Fed probably has no time lag that they would like to get. Yes, of course, they will sit on the hands for a few months, probably till the end of the year. It's definitely happens, watching what numbers will be. And again, CPI, PPI, PCE indexes, hourly earnings, by the way, in the coming non-farm payrolls release in the beginning of December, all of them probably will shake the markets every time they will be released, because markets definitely knows that inflation will be the major driving factor, and they will try to play it out to shake the boat. So actually you can see we've got the reality very fast. So once the CPI has been released, you'll see the impact. So in today's weekly report, we have tried to dig the situation deeper by taking a look at the big financial authorities such as the PIMCO, other big banks, what they think about the current inflation numbers and what they suggest could happen. So all of them mostly talk about the same thing, that they expect faster reaction from the Fed. Maybe it will happen not this year, but in January, when next statement on the tapering should happen, they definitely expect acceleration of the tapering. The Charles Schwab analysis said in particular that they expect even stronger inflation numbers in December. So this combination, as you understand, leaves very small room to appreciation of the euro in the nearest time. So all attention will stand upon the United States dollars definitely, and all attention will be on inflation numbers within the few weeks. So that's why currently, unfortunately, we have no reasons to consider taking any long position by far. While in the longer term, we are watching for approximately 110, 112 area. That will be next significant support cluster. The few levels we have, extensions, support lines. So all the stuff we have mentioned in our weekly report and analysis of the monthly weekly time frame. But in the shorter term, we could find some minor fib levels that could provide temporal support and to satisfy our demand for the pullback, serve to our trading purposes, as we actually need some pullback to rally that we could sell. And first level, this market already mostly hit. So this is 1435 area, as you can see right here, which is actually minor, as you can see, support. So this is major lows, while here we have minor level to provide some support. So additionally, we have the trend line. So this trend line support that also serves in our favor. It probably could trigger some pullback, some relief on the market after the really significant numbers that we've got this week. So taking into consideration the harmonic swings that actually have happened previously based on the pullbacks up from this trend line, we get the level that represents the minor possible target of the pullback. Here we have two harmonic swings retracement. This minor harmonic swing retracement usually leads market somewhere to 1535, 1350, 1540 area. So that's the level that we have based on the daily harmonic pullback. On the intraday charts, the picture mostly stands the same. That on Friday, price action was relatively quiet despite of ISM numbers that we've got. And so anyway, this was the minor driving factor compared to the CPI that we've got the day before, and that's the result. The market actually shows no reaction on the ISM numbers. So market stands at the major, the OP that we have specified previously, that makes an agreement, by the way, with the Fib levels, which provide some support. And mostly here we are watching for the same stuff as the day before. Since we have nice thrust down, that could become the background for Jordan-Apple directional patterns. So might be double ripple, for instance. Maybe some other pattern will be formed, not necessarily the Jordan-Apple pattern. But anyway, any bullish pattern that might be formed right around the OP agreement could trigger a pullback. Here we're considering two levels. First one in 15 even. Next, let's take a look at the previous lows. This could be retested, and following confluence around 1532, 1540. So this area perfectly fits and agrees with the daily harmonic retracement target. So from the technical point of view, the target of retracement stands just perfect. The only thing that we get, the only thing that we need is just retracement to start. So if this will happen next week, we will pay attention to this level to consider it's possible taking the short position on the daily chart.